On January 10, 2026, the Indian government quietly slashed import duties on silver by 10%. There was no fanfare, no major press conference, just a line in a government circular that most people missed. Yet, this seemingly small policy change would soon ripple across continents, setting off a chain reaction that few could have predicted. This move didn't make global headlines at first, overshadowed by bigger stories. But behind the scenes, it's now sending shockwaves through financial markets, catching investors and analysts off guard. The world's attention is suddenly turning to India, as the implications of this decision become impossible to ignore. For years, high taxes kept India's official silver demand in check. Import duties made silver expensive, pushing many buyers to the sidelines or into the gray market. The government's strict tax regime was meant to control outflows, but it also suppressed the true scale of India's appetite for silver. Suddenly, the world's largest and most price-sensitive market for physical silver was unleashed. With taxes slashed, millions of Indians who had been waiting on the sidelines rushed to jewelry shops and bullion dealers, eager to take advantage of lower prices. India isn't just another player, it's a giant with a deep cultural attachment to precious metals. Silver is woven into the fabric of Indian life, from religious ceremonies to weddings, and even as a form of family savings passed down through generations. Overnight, silver became far more affordable, sparking a surge in demand from every corner of the country. Long lines formed outside jewelry shops, and dealers struggled to keep up with the sudden influx of buyers. The excitement was palpable, as families and investors alike scrambled to secure their share of the precious metal. The world's silver supply chain was caught off guard. Warehouses that once held ample reserves began to empty, and logistics companies scrambled to reroute shipments to India. Western markets treat silver as a paper asset, trading contracts and futures, but India wants the real thing: bars and coins you can hold in your hand. This fundamental difference in approach is now reshaping the global silver market. Traders rush to buy up physical silver in the West, shipping it to India to meet the new demand. Air cargo and shipping containers filled with silver began making their way from London, Zurich, and New York to Mumbai and Delhi. This isn't just a shift on paper, it's a physical migration of wealth from west to east, straining global inventories. The sudden outflow of silver is putting pressure on supply chains, and premiums for physical delivery are rising fast. For decades, silver's price was set by paper trading, often disconnected from physical reality. Now the gap between paper and physical silver is widening, and the old pricing mechanisms are being challenged. India's move is forcing the world to confront the true balance of supply and demand. Dealers and analysts are scrambling to reassess their models as the real-world appetite for silver becomes impossible to ignore. The Mumbai rush isn't a blip, it's a structural shift that will redefine how silver is priced and understood. The world's financial centers are watching closely as India's demand rewrites the rules of the game. The world is now witnessing the real scale of India's appetite for silver. As the dust settles, one thing is clear: the global silver market will never be the same again. To truly grasp the impact of India's recent policy shift, it's essential to look beyond the headlines and understand the deep cultural and economic forces at play. You need to appreciate just how differently Indians and Westerners perceive and interact with silver. Two worlds, two mindsets, and two very different relationships with this precious metal. In the West, silver is mostly seen as a speculative asset. It's traded digitally, often never physically touched, and can be bought or sold in seconds with a simple click. For many Western investors, silver is just another line on a screen, a number that can be increased or decreased at will. But for hundreds of millions of Indians, silver is something far more meaningful. It's a form of savings that is tangible, trusted, and woven into the fabric of family life. Silver is cherished, displayed, and passed down through generations as a symbol of security and tradition. In rural India, silver is not just a luxury. It's a lifeline. It serves as a hedge against inflation, a vital part of dowries, and even as collateral for loans in times of need. For many, it's the most reliable store of value they have. When Indian families buy silver, they don't trade it away at the first sign of price movement. Instead, they keep it safe, often hidden away for years, effectively removing it from global circulation. While Western investors may sell their holdings at a moment's notice, Indian families hold onto their silver for life's major events, weddings, emergencies, or simply for peace of mind and future security. The government's recent tax cut on silver didn't just boost demand temporarily, it set off a powerful one-way flow of physical silver into India, as families and investors rush to take advantage of lower prices. This creates what experts call a black hole effect. Silver that enters India is rarely, if ever, seen again in the global market. It's locked away, often for decades. Unlike the fast-paced, high-volume trading floors of the West, where silver constantly changes hands, India's demand is sticky and remarkably inelastic. Once silver is bought, it stays put. The result? A permanent and growing drain on global silver inventories, as more and more of the world's silver finds a new, long-term home in India. Market analysts have long warned about this possibility, but now it's no longer just a theory, it's becoming a reality that's reshaping the market. Speculators who have been shorting paper silver are now facing a new world. One where physical demand, especially from India, can no longer be ignored or underestimated. The silver that flows into India is, for all practical purposes, gone for good, unless prices reach truly extraordinary, perhaps even unprecedented levels that might tempt some to sell. This marks a fundamental and lasting change in the structure of the global silver market, shifting the balance of power and supply. The world must now reckon with India's insatiable, enduring demand for silver, a force that is likely to shape the market for years to come. For years, high import duties on silver fueled a massive smuggling industry in India. Smugglers exploited the price gap, moving silver illegally across borders and distorting official demand figures. The government lost tax revenue, and honest businesses struggled to compete with the gray market. This shadow economy thrived, making it nearly impossible to measure India's true appetite for silver. The recent tax cut is a direct strike against this underground trade. By narrowing the price gap, the incentive for smuggling has all but vanished. Now most silver trade is returning to the formal economy. For the first time, the world will see transparent, accurate data on India's real silver demand. The era of hidden consumption is over. This policy doesn't just end smuggling, it reveals the true scale of India's silver market. The global market must now adjust to this new open reality. The tax cut was a spark that ignited years of pent-up demand. From Mumbai's Zaveri Bazaar to rural villages, buyers flooded the market. Jewelers saw crowds as families rushed to buy silver for weddings and savings. The timing was perfect, just before the peak wedding season for millions. Silver is the savings vehicle of choice, and now their money goes further. Bullion dealers were swamped with orders for small bars and coins. The impact rippled through industry too. Manufacturers now have cheaper raw material, boosting exports and competitiveness. The entire silver ecosystem, from refiners to artisans, got a shot in the arm. As gold prices remain high, more Indians are turning to silver as an affordable alternative. The tax cut accelerates this trend, making silver the metal of the masses. This isn't a temporary surge, it's a market recalibrating to a new reality. The scale of unleashed demand is staggering. India's silver rush is here to stay. India's recent tax cut on silver imports created an instant and lucrative arbitrage opportunity, redrawing global silver flows almost overnight. This single policy move sent shockwaves through the international bullion markets, as traders and investors quickly realized the potential for profit. The ripple effects were felt not just in India, but across the world's major financial centers. Traders scrambled to buy up as much physical silver as they could in London and New York, eager to ship it to India and capitalize on the widening price gap. The phones rang off the hook on trading floors, and deals were struck at a frantic pace as everyone raced to get in on the action before the window closed. This sudden surge in demand triggered a historic eastward migration of silver, putting immense pressure on global logistics networks. Cargo planes and shipping containers were quickly repurposed to move tons of silver, and international freight hubs buzzed with activity as shipments were rerouted to meet India's insatiable appetite. Massive bars, once securely stored in Western bank vaults, were now being flown directly to Indian cities. This rapid outflow began to drain inventories that traditionally back Western paper markets, raising concerns among investors and institutions about the stability of these financial products. Premiums for physical delivery soared as available stock vanished from shelves. Auctions saw fierce bidding wars, and sold-out signs became a common sight, reflecting the intensity of India's demand and the scarcity of supply. Every bar sent to Mumbai is one less to settle contracts in New York or London. This shift is not just about moving metal. It's about shifting power in the global silver market as the West finds itself with dwindling reserves. India's relentless demand for real, tangible metal is now testing the very integrity of the paper-based system that has dominated for decades. The contrast between physical bullion and paper contracts has never been more stark. As Western vaults empty, the ratio of paper claims to actual physical metal grows ever riskier. This imbalance is raising alarms among market participants, who worry about the potential for a squeeze if too many holders demand delivery at once. This tightening market creates a powerful feedback loop. Falling inventories drive more urgent buying, which in turn squeezes short sellers and pushes prices even higher. The volatility is attracting even more attention from speculators and investors worldwide. The arbitrage trade, sparked by India's bold policy move, is fundamentally shifting the global supply-demand balance. The world's silver flows are being redirected, and the consequences are being felt in every corner of the market. The dominance of Western paper markets is now being seriously challenged by the sheer scale of real, physical demand coming from India. This marks a turning point in how silver is valued and traded globally. The world is watching closely as silver flows rapidly eastward, and the traditional rules of the market are being rewritten in real time. Analysts and journalists are tracking every move, trying to predict what comes next. India's appetite for silver is now the driving force behind this global transformation, setting the pace and rewriting the playbook for the entire industry. Silver in India isn't just about jewelry, it's vital for industry, especially solar energy. Silver is essential for photovoltaic cells, and India's solar ambitions are massive. The tax cut acts as a subsidy, making domestic solar manufacturing more competitive. This supports India's push for renewable energy and energy independence. Industrial demand is surging, from electronics to medical devices. As India industrializes, silver's role in technology and infrastructure only grows. The tax cut boosts both cultural and industrial demand, creating a robust, dual engine for silver consumption. Cultural demand is price-sensitive and deep-rooted. Industrial demand is steady and expanding. Together, they make India's silver market uniquely resilient. The recent policy supercharges both sides, ensuring long-term structural demand. India's appetite for silver is now a permanent feature of the global market. The world must adapt to this new reality. India's policy change is shaking the entire silver supply chain. For miners, booming demand means higher prices and renewed investment. Years of underinvestment may give way to a new mining cycle. Refiners are racing to meet India's appetite for large bars and kilo bars. Swiss refineries are running at full tilt, with premiums and wait times rising. But the real pressure is on the paper market, especially those short on silver. For years, futures contracts set prices, often detached from physical reality. Now, relentless Indian buying is draining Western vaults, exposing the system's weakness. If enough futures buyers demand delivery, a short squeeze could erupt. India's physical demand removes slack, making it harder for short sellers to cover. The Mumbai rush is a real-world stress test for the paper-silver market. The outcome could reshape global finance. India's silver policy is part of a bigger geopolitical strategy, especially within the BRICS bloc. BRICS nations are working to reduce reliance on the US dollar and Western financial systems. Accumulating physical assets like gold and silver is central to this plan. By encouraging citizens to buy silver, India decentralizes national wealth and builds resilience. Millions holding silver at home make the nation stronger and less vulnerable to external shocks. This grassroots wealth complements central bank gold reserves. Within BRICS, India's move aligns with a shift of economic power eastward. China dominates gold, now India is asserting itself in silver. Together, they're reshaping the global precious metals market. By formalizing its silver market, India gains more influence over global pricing. The days of London and New York setting the price are fading. Emerging economies are now active shapers of global markets. India's silver tax cut is a structural, irreversible shift in the global market. For the first time, the world sees the true depth of Indian demand. No more guesswork. This transparency sets a new, higher baseline for global silver consumption. The Mumbai rush has redefined the market's floor. Silver can no longer be viewed solely through Western futures markets. Physical demand from 1.4 billion people is now the main driver. The days of paper contracts dictating price are numbered. The eastward flow of silver is a symptom of a larger transfer of wealth and influence. India's consumers are now the most important buyers in the world. Their collective actions will shape silver's future more than any trading desk in the West. Ignoring this shift is ignoring the new global order. By making silver accessible, India has reawakened a giant. The world must now pay attention. India's silver story is everyone's story.